Good evening. This is Ken Long from Tortoise Capital on August 13th, 2015. Want to take a look at some swing trades that are underway and then one that we just started today to show our principles in action. The first one we're looking at here is a swing trade in Netflix. Netflix has been the number one stock in our universe of targets for the last really 6 weeks, and so this is a regression line fractal framework excursion and pullback. You can see we've got the RLCO framework here on the screen. You can see that at this moment the 10-period regression line had achieved a considerable stretch away from the 270 regression line. That's this pink one, and that set up the number of ATRs that was away from the 270 is what gives us that setup. We get a nice orderly pullback so that the 10-period regression line just comes through the dragon, which comes back into the river, and then the 10-period regression line reverses, and so now we're playing the regression line crosses dragon entry, the rlxd. This is a very strong stock. This is an orderly pullback to the edge of the river, and now it is resumed, and so we get our entry in here at about 114. The next 3 or 4 days we get a nice run up here to 129, almost 130. We get another orderly pullback to the edge of the dragon. It was 5 days down, and then a second position we put on when that price finds support at the edge of the river and in the dragon and reverses to go higher. So we get our intraday turbo second position on here at about 122, and we're using the about a $7 stop for position sizing, but we've got the stop on both positions now actually moved up to just at the parabolic stop and reverse here at 120, so we're risking 3 right now. So we got a nice second position on in the strongest stock in our stock universe, and price is behaving well, and we like the price action from today. The next symbol we'll look at is on the other end of the spectrum, Brazil, which is the weakest of all the broad country indexes that we follow and has been for some period of time, along with the rest of Latin America. And you can see here over the last 3 months, it's moved down from around 36 all the way down to 26. When we had this little support level at the edge of the river, held and then collapsed, we reshort this position here, and we get short at 30.75, and we're using a stop just above the dragon at 32.25, so that's about $1.50 on the swing trade. It moves out in our favor, comes back to the 270, and has been paralleling the 270 ever since. We simply use the north skin of the dragon or the PSAR, whichever one is higher, as our stop, and so we've got this orderly stop management, which right now is stuck at fair value at the RL270, but with today's price action, this one is certainly working. This one looks like we've got about 3, almost 4R into this position, and the position well in hand. The recent entry we just took today was in Procter & Gamble. This is the most beaten down of the RLFF candidates, the regression line fractal framework. This is what it looks like on the other side. And so there was a moment here when we had price made an excursion out here past Z minus 2, and then the 10-period regression line reverse and has now entered the dragon. And so we're taking this as a swing low here at about $75 even. And we've had 5 days of failure to fail further. Today was a bit of a disappointment. It started off with a nice gap up opening, but it sold off and then stabilized during the day. And so this looks like price at a critical state to me. And so now I framed a trade ready to go in either direction, but I'm actually long at 75.84. And my price targets on the upside, target 1 at the edge of the river, target 2 is the RL90, and this previous support level, which is now resistance. And then the third target is just back to the Bollinger Band mean. And I'm only risking about 50 cents on this one. At the red line with the arrow, that means if it does fail below this red line, then I'm going to stop and reverse and go short on the weakest stock in the Dow. And so this is a critical state because we can frame a favorable reward to risk ratio trade in either direction. I want to finish up with just a quick look at an intraday trade that started off with a swing trade. This was from one of our traders in the trading room who's been applying these techniques with some success. So we're looking at at 3-minute charts on McDonald's. It was a 551W symbol, and so he was looking to turbo his entry and then try to use money earned from the turbo to fund the overnight trade, and that's exactly what happened. So price sells off in the morning hook. He gets a 1, 2, 3 entry here. He buys the position here with a stop down here. Price gets through the dragon and is moving upward. He ends up managing to a 1R win, takes off half the position, keeps the second half on, and it was managing that during the day, and has now earned enough money on this turbo to actually fund the overnight risk with markets money, so he's reduced his risk considerably. So that's just another example of the way we like to leverage the information that's available to us about market conditions and sector conditions in the higher time frames, and using that to frame low risk trades intraday in those very same targets. So that's Ken Long with some swing trades of interest and a couple techniques. Keep your risk measured and your powder dry, and we'll see you in the chat room.